I have no fucking idea how long this war is going to last. The longer it lasts, the worse it is. Not that everyone loses their job, but AI. All I'm saying is 10 to 20%. 20% you have a banking crisis. These shortages play out in food, in minerals, in energy. AI agents will use some sort of blockchain-based cryptocurrency. Obviously, I think a lot of investors will rediscover their love for gold. If you want to talk about who's real, Hyperliquid is real.
The Clarity Act. How important is it? Well, today we're going to find out exactly how important 𝗏𝗏 Hayes thinks the Clarity Act is. We're also going to find out from Arthur today exactly what he thinks of this war and how this war is going to affect markets. And it's not only Bitcoin markets, it's the oil markets, it's the stock markets, it's the AI revolution. Because one of the things about this war that Arthur actually mentioned is, I didn't know that Korea was so important to all the AI components. But when you look at the Strait of Hormuz actually being closed, and when you look at the shipping lanes and how they've been affected, you kind of realize that, hold on a second, this shipping blockage may actually crash the markets and crash the entire AI market. So we've got a massive show with Arthur today. The good news is, though, that I looked at the oil chart today, and yes, the oil chart spiked up. And remember, I said to you guys that this oil chart for me is the chart of truth. This shows you that the market's expecting a much longer escalation despite what we actually read in the headlines. And whilst that's happening, guys, Bitcoin's still at $73,000, which is amazing. So I think that right now this pump is going to continue. I'm going to talk to Arthur about that. We're also going to talk about AI and, whether AI takes all human jobs and what do humans do when AI actually does this. There's so much that Arthur and I need to talk about, so let's not waste any more time. Let's bring Arthur back on. Arthur, how are you, my friend?
How you doing? Happy New Year.
Happy New Year to you. Happy New Year. It's been a beginning of a new year, and there's so much that's already happened. It feels like it's almost like time to be the end of the year. Yeah. I want to start off by something quite controversial, but I joined here, I came to crypto in 2015, let's call it. And when I came here, I came for the promise of digital money that governments couldn't intercept, and we owned our own money and we owned our own keys. That argument fell out the window because the block sizes were too small and Bitcoin was too expensive to be money. And then I said, well, I'm here because it's a store of value. It's programmed to be a store of value. It's limited to 21 million coins. It's mined in a certain way, etc., etc. And now the store of value narrative is kind of fallen apart, because I can say that confidently that in this cycle, Bitcoin wasn't a store of value. And so now I'm one of the big proponents of Bitcoin. I don't really know what to tell people about what Bitcoin actually is. And I'm very keen to know from your point of view, what is Bitcoin? What is it today? Is it a cash? Is it a store of value? I know in one of your previous or one of your most recent Substacks, you actually wrote that it's a global fiat liquidity fire alarm. And so I'm really keen to why should people buy Bitcoin? What is it?
Well, okay, so obviously everybody has a start and an end date, and when they say Bitcoin has either outperformed or underperformed. But if we go all the way back to sort of 2009, 2010, when Bitcoin had a slightly greater than zero value, to today where it's 66,000 or whatever the amount it is, it has outperformed the debasement of fiat currencies, most notably in the United States and second in China, right? And so it has outperformed. It has done better than gold. It's done better than stocks. It's done better than every other asset in human history. So it absolutely is a store of value. It absolutely has outperformed the debasement of fiat currencies by every single government around the world. The problem is, when did you buy it? And so if you say, yeah, I bought Bitcoin, January 2025, and now I'm down, I don't know, what is it, 45, 50%, whatever it is, and you say, oh no, that's not a store of value. At the same time, gold is up, 3x or however much it's up. And the S&P was up 40% and whatever, right? So whatever, pick your stock, pick your other asset. Bitcoin underperformed because I got in at this date, and Bitcoin should outperform because I invested on day 0 today, and it's day 10, and why the fuck is it not got me my Lamborghini, right? And so I think that's what a lot of people think about when they say Bitcoin is not a store of value, because they think that they're so important that the market needs to outperform because they bought it on that day. And so I think that you just need a bit of perspective in terms of what Bitcoin has done over its entire life cycle versus what every other fiat denominated asset has done. Has Bitcoin outperformed? It absolutely has. It's just a question of when you got involved.
Why do you think gold has done so well, particularly in the last couple of, I don't know, years, months? This kind of price move. Gold is this chart over here, and this kind of price move in gold is quite unusual, right? Like, why do you think gold is doing so well?
Because gold is essentially being bought by central banks and sovereign governments who want to protect themselves from the US dollar. And so, obviously, US and Europe stole Russia's money in February 2022 after the Ukraine and Russian war started. In 2008, the Fed decided to bail out the banking system instead of allowing the system to deflate, and essentially printed a bunch of money. And so countries are like, well, I can either get inflated away by the Federal Reserve and the U.S. Treasury, who issue more and more debt to fund this consumer welfare state that is the United States of America, or I can keep my money in dollars, and if XYZ president doesn't like my politics, then they abrogate my property rights, and I no longer have any money. So why would I hold these dollars if I don't have to? Sure, I'll price my widgets and oil in dollars, but after I pay for my imports, what do I save in? I save in gold. And that's what central banks have been doing to a greater and greater degree, starting in 2008. Obviously, really accelerated after 2022 when the Russia-Ukraine war started and the West stole Russia's money. And so every other sovereign central banker is like, well, hold on a minute, that could be me. And maybe it's not that I started a war. Maybe I didn't sell the U.S. this widget at the price that the president wanted me to sell it at. And then he just calls up the Treasury Secretary and says sanctions. And then all of a sudden, all these money that I saved is no longer mine because I can't access it. So that's why governments are buying gold. And we've seen country after country either stop buying treasuries outright, sell them, or say, when I save, export over import in terms of earnings, I'm going to buy gold. And that's why gold has gone up.
Do you think that that gold carries on going up from this point, or do you think it's like reached some kind of top? You think it just carries on going up? I'm not going to say forever, but certainly for the next couple of years.
I mean, obviously, the events that just happened over the weekend further underscore why you want to save in gold, because if for whatever reason you didn't line up on the right side of Donald Trump's war against Iran, he calls up Destiny and says sanctions, and goodbye your dollars. But if you have gold that you physically custody in your own country that's protected by your own military, you can, with a straight face, go to your citizens and say, for the hard work that you've done in our manufacturing businesses, we don't hold these dollars that can be stolen from us at any time. We hold this thing called gold, which has been used for thousands of years by every single sovereign government as what real money is.
Do you think that Bitcoin ever replaces gold as this government store of value? And I know that was like the crypto bros narrative to say, we're a digital gold, we're better than normal gold. You don't store it in Fort Knox, you don't have to audit it because it's all audited on chain, etc., etc. In this cycle, that didn't happen. In this cycle, in fact, I think I showed the chart here. Here's the chart. That's what happened to the orange line is you can kind of see, I think the orange line here is Bitcoin or whatever, but you can kind of see that they completely diverged. So that the orange line is Bitcoin. So it went straight back down. The green line is the NASDAQ, and then this is the gold chart. So it didn't happen in this cycle. Do you think that maybe just because Bitcoin wasn't a store of value this cycle, because it's only really been available to institutions for a year and a half, do you think maybe in 3 or 4 cycles the Bitcoin becoming the de facto store of value could actually happen?
I don't think so. I think that a central government run by people who can barely use a computer are not going to entrust their nation's wealth to a bunch of private keys that they might forget, or somebody on their staff. It's not going to happen. Maybe when all the boomers die and the Gen Zs and whoever take over government, maybe a change can happen. But my mother is not going to save in Bitcoin versus gold for this zero value narrative.
So when you tell people you're buying Bitcoin and they say to you but why are you buying Bitcoin? What are you buying it for? What's your thesis? Why are you buying it?
There's going to be more units of fiat created at a faster and faster pace. than there is today, and that's why I'm buying Bitcoin. Bitcoin is a credit derivative of tell me the pace of fiat money creation. I'll tell you what the price of Bitcoin is. Obviously, in a macro sense, I don't really know what
So
the function is.
so does that mean that like now not many units of fiat are being created since October 10th?
So I think, and I argued in my not my last essay, the last essay before them called "This Is Fine," that again, if Bitcoin is this credit fire alarm, what is the biggest credit negative event that's happening right now? It's what happens in especially the Western world and especially the United States because it's a much more flexible labor market. When the highest earning cohort of individuals, knowledge workers, people who manipulate digital symbols for a living, no longer have a job. And not 100% of people lose their job because I know some people on social media say, oh, well, you're wrong, Arthur. And I think Citrini put out a similar sort of report. We have creative destruction, people are going to retrain, yada, yada, yada. And my point is, let's call it 10 to 20% of knowledge workers lose their job over the next 3 to 6 months, similar to what happened at the Block, or Block, I don't know what you call the company. Dorsey fired 40% of his staff in one clip because AI made his business more efficient. So what happens if we get 10 to 20% of the highest earning, highest propensity to consume Americans who no longer have a knowledge worker job? It takes time to retrain into whatever it is people do after this AI disruption, but your credit card payment, your auto payment, your student loan, your mortgage, that's due every month. You got to pay bills, you got to eat, got to take care of kids, right? What happens to all this credit that these people have put on themselves because for the last,
So
40, 50 years, these have been the jobs to have.
So I must say, I've been, this is one thing that actually does keep me up at night. Why? Because I do see a world where humans are being replaced much faster than we anticipated humans to be replaced. These humans that are being replaced are the exact humans that actually have mortgages. So it's not the blue collar worker that's working with his hands and is living from hand to mouth that are actually being replaced yet, though they will be replaced in the age of robotics, which is just around the corner. The guys that are getting replaced are exactly what you said in your essay, where you said these are the white collar workers that are the ones pressing digital buttons for a living, which AI can do way better and way more reliably. How do you see this transition going? Like, these guys for now get retrenched, struggle to find new work because the work's being fulfilled by Mac Minis and and algorithms with algos with AI plugged into them. What do these guys actually land up doing? What do they actually land up doing? What do they do?
I go out in the street and protest at the end of the day, right? This is a societal revolution. What do you do with all these people who thought they were the biggest swinging dicks in the world, who looked down on everyone else because they went to university, they were a hotshot lawyer or accountant or worked for a bank.
Sure.
They took on all this debt because they thought that their incomes would only go up because that's what college educated people did in the United States. And all of a sudden they say, here's a pink slip, and we don't need you anymore, and go deal with unemployment like the people that you look down on for the last 30 years of your life or 40 years of your life. That's a massive ego destruction for people. And then you see the handful of employees at any one of these AI tech companies making millions and billions of dollars a year in terms of compensation. The companies are doing very well profit-wise, maybe not. You have companies, the market rewarding companies for cutting half their workforce immediately. The stock price on Block jumped 20% that day when Dorsey announced the job cuts. So the market's rewarding this. Oh, you're being more efficient. You're going to have higher corporate profits. Okay, we give you 4 PE multiple and your stock price goes up. This is exactly what AI is supposed to do. Finally, we're at this stage where all this money that we spent on these tools is going to lead to better corporate efficiency. So when stock price go up, a certain number of asset holders make a lot of money, and all you white collar people, and also they're very politically engaged, right? These are the people who are going out to vote, who carry the flag for whatever political party that they represent, and now they're out on their ass on the street. And you think they're not going to go get a gun and talk amongst themselves and say, fuck Elon, fuck Sam Altman, fuck these guys. Why aren't we? Where's ours? Just like everybody else very human reaction. So I think there's going to be a societal conversation. It's going to start probably in America first because again, it's the most flexible labor market and around the world. And how do you share this efficiency? Do you tax it as a universal basic income? I don't know what the solution is,
But that's a
there's going
long
to be a
process.
conversation.
That's a long process. That's not saying that's resolving itself in the next 12 to 24 months. That's saying that they'll learn to tax it and they'll come up with some kind of UBI. I say three to 5 years from now, when this after the revolution plays out.
Maybe, but again, my thesis is I don't care about that. I care about the next 3 to 12 months. You have a highly levered banking system that needs these cash flows, and when you say that hundreds of billions or trillions of dollars of loans essentially are worth zero because these people are not getting their job back in any reasonable amount of time, what happens?
Holy shit! So I mean, I now realize why you called it the subprime of the cycle, because this is effectively the leverage in the system. The leverage in the system is that the majority of the workforce that is leveraged actually won't have an ability very soon to pay back their loans, and then that effectively causes the banks to collapse, and then the only way to get the banks out of a collapse is to actually print more money.
Right. Same thing. Same with subprime. And again, subprime wasn't every homeowner in America failing. We're talking I think the liquidity rates went up to high single digits, and that caused almost a Great Depression-like scenario in the United States and around the world. So it's not that everyone loses their job for AI. All I'm saying is 10 to 20%. I think in the article I said 20%. 20% you have a banking crisis.
So walk me through how inflation and unemployment play out. In other words, how does the Fed play all of this? Because on the one hand, you're going to get an increasing unemployment rate. All of a sudden, you're going to get a whole lot of unemployed people and not enough job vacancies to actually fill it. That's what happens to unemployment. So the unemployment rate that we got now, around 4% or 4.4%, basically becomes, in this scenario, 5, 6, 7, 8, 9, 10%. I don't even know what the numbers look like. What happens to inflation? Do prices go up or down in this period? I guess inflation goes down a lot because these people aren't spending and they're not really stimulating the economy. But at the same time, there is a cohort that is spending because there's data centers being built, there's infrastructure being built to accommodate all of this shit. The world is becoming more productive. In net, the world is becoming more productive because of AI, and so there is a lot of spending going on, and that ultimately does cause some kind of inflation, right?
I don't know who coined the term inflation and what you need, deflation and what you want. What do you need? You need food, you need calories, right? What it did is they need minerals. Great. Those things are continuing to go up in price. Electricity, continuing to go up in price. Deflation and what you want. Your shitty Chipotle burrito, your shitty fucking salad, fast casual, buying the expensive knickknack. Now you're shopping at Walmart, and all you're doing is everyday low prices, buddy. And so that's the scenario for a lot of people. And you're still going to see these shortages play out in food, in minerals, in energy. But all this superfluous things that only were supported by, these high earners, all that shit goes down in price.
So inflation goes down, and inflation goes down to deflation, or inflation just goes down to...
I mean, I think inflation is a catch-all term, but everyone's inflation rate is different. There's not one inflation rate. Everyone's household spends in different ways. I don't think inflation really matters in this context. What really matters is if the unemployment rates start spiking, the market says, okay, unemployed people can't service their debts. So I start attacking small banks that have a disproportionate share of their loan book in consumer loans, in certain types of mortgages, right? And I start hammering those stocks. And then all of a sudden, it's the depositors say this shitty little bank that I have my deposit in, their stock's down 50, 60% over a few days. Do I really want to keep my deposit there and wait for, I know that they will get bailed out eventually, but why don't I just, get on my phone, tap, 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 and all of a sudden my money's at JP Morgan, because JP Morgan has a government guarantee. So the best run and the biggest banks that have a government guarantee are completely fine. It's just like in 2023, it's all these shitty little banks that have to finance themselves in the wholesale markets that have all these loans exposed to the worst parts of the credit spectrum. They're fucked. And that's why the Fed will have to print money to save these
So,
banks, because they will save the banks.
I mean, let's put the banks aside for a second. I want to talk about the human element of all of this. How worried are you about the human repercussions to what's about to happen? Like, to me, I won't say I'm panicked, but I think I'm just under panicked about the fact that most people that I know probably won't have a job unless they are building buildings or in the freight and transport industry. Most like white collar executives, which are the majority of my friends, generally those guys aren't going to have jobs anymore.
Again, I think if we're really talking about the United States. I don't live in the United States. I haven't lived in the United States for a very long time because it's a very flexible labor market. Contrast it to Japan. I don't know when this was, maybe a few weeks ago. I was reading a headline. Some Japanese large conglomerate said, we're going to fire so many workers because of AI in 10 years, right? So you can adopt a different approach. You can say, oh, there's all this efficiency here. I see all those people getting fired in America, but our social contract is different in our country. And so we're going to be inefficient and use humans because that's what we do. Yes, our stock prices won't go up very fast, but that's not why we're here. And our society will be different. I'm not saying it'll be better or worse, it'll be different, right? And so, again, what is the social contract between labor and the government, wherever you live, will determine how fast a company is able to realize these gains in AI. Where in the US, there is no social contract. You're out on your ass, no benefits. Goodbye, right? I mean, 𝗥𝗘𝗦𝗧 was very nice to give all that severance, but, getting to the meat of this crisis, most companies are, fuck that. Contract says a week. See you, buddy. Right? And so it really depends on where you live and what the social contract is between labor and the government.
Yeah. Okay, so that's AI. I want to just quickly, before we move on to the war, and I do want to move on to the war that happened this weekend. For me, the only reason why I think I'm still in crypto is because I really believe that in the AI agent economy, and I do believe that the next economy is not a human-driven economy. It's an economy that's powered by a bunch of AI agents, millions of AI agents doing billions of microtransactions and transactions every single day. And the kind of like my only thesis around crypto at the moment is that crypto is the rails for these agents to transact. And without these rails, these agents simply won't be able to transact at the speed that they need to transact, in the trustless manner that they need to transact, etc. Am I right, or is that like the way that you see it? Or am I trying to sales pitch myself here that that AI agents will run their payments and their rails on crypto rails?
Yeah, I mean, I wrote an essay about that a few years ago. Like, crypto is the native currency for an AI. Which crypto? I mean, it could be Bitcoin. Obviously, it's the longest lasting one so far, but they could create their own. Who knows? But just because transaction volumes go up doesn't necessarily mean a particular crypto ecosystem you own is going to go up in price. So I would caveat it with that. But yeah, I definitely think that AI agents will use some sort of blockchain-based cryptocurrency. What it is, I have no idea.
Okay. Let's pivot to this weekend's happenings, which is the surprise attack on Iran. I guess it was the worst kept surprise in the world. Everyone knew it was happening. It was just a matter of when. Trump did it in true Trump style by doing it on a Friday or on a Saturday. So after the markets closed on a Friday and making sure that all the dead bodies had risen to the surface by Sunday. How do you see this war affecting markets? Now, I know that with most things, your endpoint is the US ultimately ends up printing more money. I want to know how you get from where we are today to the US printing more money.
So obviously, Trump started a war with Iran less than a year ago. That did not lead to more printed money. Why? Because it was very short, lasted 12 days. And I'm sure, I don't know how many billions or dollars were spent, but in the grand scheme of things, in terms of what the US spends on wars, it was minuscule. So the reaction function is the longer this war drags on, the more retaliation that Iran does against things that could hurt a highly leveraged society. Energy prices, right? So we're starting to hear reports that refineries in Saudi Arabia have been hit by drones. There have been ships that have been hit by drones by Iran. They've obviously attacked a number of ports and other infrastructure around the region. So, and obviously we know that Trump is very focus on markets. Otherwise, why would you launch this attack on a Saturday morning in Iran, right? Obviously, you care about the markets, and obviously, in some way, shape, and form, he believes that this could be a short war. And so the cost of this war in terms of higher oil prices or financial markets dysfunction can be minimized such that he doesn't get a F on the report card from the markets with oil at $150 and the S&P at 3,000, right? That is game over for him. We saw what happened during the Liberation Day tariffs. 1 week of market dysfunction, were gone. And it was all about, truce with China, walking back the rates, negotiate, pause, kick the can a bit down the road. So in this situation, again, I have no fucking idea how long this war is going to last, but the longer it lasts, the worse it is for Trump, especially for any Republicans who are supporting him because they need to get reelected in, less than a year. They need to go to the ballot box. And if the message is, oil's at $150, gas prices are at $5 a gallon in the US, and your stock portfolio is down 75% because, they were fighting this war in Iran for whatever reason that they said they were fighting it. I don't even know why.
Yeah.
And then you're not winning election. And so again, I don't know how long that's going to last, but I think that's what people have to think about is, okay, the longer it lasts, the more expensive this is for the US. And then the more expensive it is, the Fed always comes to the rescue during a wartime. In the article, I posted 2 examples of the 1990 Gulf War, where H.W. Bush attacked Iraq. The Fed accelerated easing after the war started. You have September 11th attacks in the United States and the subsequent wars against Iraq and Afghanistan. Credit was provided, money was printed, and the rates were dropped aggressively during that episode. And then the third example I put was Obama's surge in Afghanistan and his other related forays in the Middle East. But the Fed was already at 0% in quantitative easing, so there really wasn't much more for them to do. So if this war lasts through the next Fed meeting, it'll be very interesting to see what the committee members say in their statement and if that changes the stance of Powell and the other voting members to, at a minimum, cut rates, signal that the reverse management purchases program is going to continue or upsize, or even start outright quantitative easing because they need to help the U.S. finance this war affordably.
So you think this war is going to go for a long time? Because the impression that I'm getting here is that it's going to be pretty quick. Like Trump said this morning, he said he thinks it'll take 4 weeks. Like, do you think that this is a long
didn't he say on Saturday it was going to take 4 days, and then it morphed to 4 weeks, 2 days later? I mean, I don't know how long it says. I don't think. I'm sure that he got sold a timeline, and as anything in war, that timeline is bullshit. And now the timeline is a new timeline, whatever that timeline is. We don't know what it is, but it seems the rhetoric is changing. It's over in a few days to, no, give me a month, and then, if their objectives still aren't met, whatever those objectives are, I don't know what those objectives are, then it'll be give me 6 months or whatever, right? Unless the markets come and say, oh no, we don't like this. $150 oil, S&P 3,000, we're going to punish Western financial markets. A bunch of rich people in Dubai can't get out of the country because, there's no ports, there's no airports. There's a lot of asymmetric things that affect Western sensibilities that have no effect on Iranians who've been, under the gun since 1979, in some way, shape, or form. So that is this war. And so which side blinks, I guess, before and cries uncle and gets back to the negotiating table?
Why do you think that Iran attacked places like the UAE, which is seen as this bastion of peace in the Middle East? I could never in my wildest dreams did I ever imagine Dubai or UAE being pulled into a war. Why do you think Iran went? I mean, they ultimately made it.
I heard an interesting theory. This is not my theory. It's from the researchers at 𝗥𝗘𝗦𝗧 Research, a research outfit out of Hong Kong that I subscribe to. And the author's theory was, in his mind, he believes that Trump believes that there was some senior military cadre that would rise up and take power once the figurehead or the Ayatollah Khomeini was assassinated. In a similar way, where he negotiated with the number two in Venezuela and said, "Okay, you saw your boss go. What do you want to do?" And they're, "Oh, we want to give you the oil, right?" And so I think that's what he was expecting. And if I am the political leaders in Iran, the rumor is that a lot of these folks have all their money offshore in Dubai and all these other locations in the Middle East. So what do I do? Well, fuck your banking system. If you think you're gonna have a coup and somehow just waltz in and keep all your stuff, well, let's just shatter this illusion that there is any sort of peace and normalcy in these locations that are literally across the Persian Gulf from us by bombing them. Let's cause the Western financial class some pain for supporting Trump in this war by hitting these places that have symbolic nature in terms of the Burj on fire, or a bunch of very wealthy people who can't get out of the Dubai airport and such, right? So I think that's part of it. And obviously, there's U.S. bases littered around the UAE that have also been hit with Iranian weapons.
So let's break it up into two parts. Part number one, the war gets resolved quickly. So let's say that Trump was right, and in 3 to 4 weeks the war gets resolved. Generally, if Trump's right, the majority of the escalation is about to or has already happened, and then the rest is like, Israel's got air control, the US has got air control, and it just becomes a long...
I don't think he has 4 weeks. I think 4 weeks, if this takes 4 weeks, I think the US financial market's in big trouble. I've perused I forgot which investment bank put out a report basically saying that if the Strait of Hormuz is closed for more than 25 days, then these major oil and gas producers have to start shutting in their wells. And so it's not like if I shut it down, I just get to reopen it the next day. If you go to shut in a well, that's a major problem. And so that could cause oil to really accelerate. I mean, I know it's up to what, $80 or whatever the number is right now. It's bad, but not that bad, relatively speaking. But you see this thing last in 4 weeks, and whatever the Iranian new leaders are able to continue lobbing missiles all around the Middle East for the next 4 weeks. There's no telling how much damage they could do to oil infrastructure. And that is sort of an exponential move higher in oil. I don't think Trump has 4 weeks to bring these guys to heel. If the oil market is going to be the fulcrum that determines whether he stays or goes in terms of his willingness to continue fighting this war.
So you think option number one is it finishes way quicker. Option number two, this thing goes on for... I mean, I don't see how it goes on for a year, 2 years, 3 years, because it's not a ground war. It's very much an air war. And air wars generally don't carry on. You can't carry on. Each one of those bombs cost millions and millions of dollars. Unlike, if you're fighting a ground war, it's
again, I've never served in any military faction. I'm purely a fucking keyboard warrior. So, like I fucking know what the fuck they're supposed to do. Well, I mean, if we just use the example of the last war, right? It was an air campaign, obviously. Trump has an offer. He just says, okay, I accomplished my objective. And then he gives whatever the objective is. And then everybody says, yep, you did what you're supposed to do. And then he goes back, packs his bags, and, re-ups to do the next time they want to bomb around, right? And so I think that is obviously a scenario where they say, okay, we've done what we needed to do. We spin the PR after we have to spin the PR, and we pack our bags and go home. So, yeah, for sure. But I can't really have the probability on that. I have no fucking idea.
I mean, I look at the charts. The charts are telling me two stories, right? So the first thing is the oil has broken. I'll actually put it up here. So that's the oil chart, and you can see that the oil chart is broken through this trend line, which it's been on since 2023, and maybe even before that. But I'm saying it's been on this downward trend, and then it kind of spiked up above this line, which to me says there could be trouble. And then the other chart that I'm looking at is the TLT. So the TLT is effectively the 20-year plus, or the long bond, called the long bond chart. And this chart also basically broke out. So if you kind of look at like this thing over here, there's like a little breakout that happened over here. And I'm like kind of looking at this, and both of these are painting quite a long, if the charts are right, and on the one hand I always say, show me the charts, I'll tell you what the news is going to be. If the charts are right, then, oil up, TLT breaking through a long-term downward trend, that doesn't paint a very cool picture. It says that oil's going to go up and people are going to go into long-term government bonds.
And maybe that's the first reaction, long-term government bonds. But if oil goes up and Trump really has to say, okay, I need to do even more, whatever that means, in
Yes.
terms of escalation, in terms of firepower and spending money and all this, do you really want to own the bond that he's got to sell? How many more bonds does he need to sell?
I,
What if he somehow is able to get to the point of, okay, American people, for whatever reason, or whatever these objectives are, we need to put boots in Iran, and we're calling up 200,000 soldiers. We're gonna go there. We're gonna kick their ass and show them who's boss. USA, USA. I mean, why would you want to own bonds in that scenario? The U.S. supposedly spent something between $5 to $10 trillion in the Iraq and Afghanistan debacles over 2 decades. And if the next escalation point is, okay, well, we actually need to go in here, whoop some fucking ass, and run this show, then we're talking trillions of dollars of
which
spending. Do
needs
you
to
really want to own bonds? And so at some point you say, well, yes, maybe your initial reaction is, okay, I got to sell something. This is bad. I sell some stocks, I get into bonds. And then you think about it for a second and you're like, hold on. They are going to have to spend so much money and print it and issue bonds. Why do I want to be in these bonds? And so that's why, obviously, I think a lot of investors will rediscover their love for gold, which has obviously done well. It's up to what, 5,400 or something. Even though the dollar is rallying against the euro and the yen, but gold is also rallying. So dollar strengthening, gold's rallying. That tells you that this is going to be a credit negative event if it continues much longer.
Mm, mm. Okay. Let me ask you a question. If you have money sitting on the sidelines right now, and I don't mean crypto money, I mean, there's an investor, he's got money sitting on the sidelines right now. Kind of like, what's the thesis? What do you do now? Do you keep it in cash? Do you invest the cash? Do you put it into gold? How do you break up? Let's say you got $100,000 sitting on the sidelines and you want to start investing it today. How do you invest it?
I probably would keep half of it sitting in cash, and the other half I'd buy gold. I'd wait for some central bank printing before I'd start buying Bitcoin because Bitcoin's going to go up for a different reason. It's going to go up on, pure fiat reflation, especially coming out of the United States. And so,
So
if
you're not buying bonds.
maximum,
You're not buying bonds. You're saying
not buying bonds.
stay away from the bonds. Equities, given AI, would you put your money into AI related equities? Would you put your money into Nvidia's, Apple's, stuff like that?
No, I don't mean I use Perplexity and a lot of these tools. I don't know who's going to make money. I mean, yes, Nvidia is a great company and they're always going to sell chips, but is the forward multiple justified? I have no fucking clue. There are people who are smarter than me who do trade this stuff. I stay away from all tech. I do simple things. Rocks in the ground. I understand that shit. That's what I own. I own rocks in the fucking ground. And then I own magic internet money. And so,
Yeah.
two
So okay,
sides of it.
Bitcoin, you say not yet. Wait for central bank printing before you actually hit the money. Before you actually hit the button. I mean, would you look at any emerging market investments? Like, is that a thing? Like looking at emerging.
So I am bullish on Latin America as a an investment. If you're a US dollar based investor, I put together I think it was about a 15 stock portfolio of ADRs that trade in the US. So if I buy the ADR, I'm naturally short the dollar. So I want to be short dollar and long Latin America, as a lot of these countries get their shit together. They have a lot of resources. They could play off US versus China in terms of getting a better trade deal. And I think a lot of capital is going to go to places like that. And you can say the same thing about certain emerging markets in Asia as well. And I think South Africa is one of the best performing stock markets last year. Rand is strengthened.
It was, yeah, and we got rand strength, which is kind of ridiculous.
Yeah.
But remember, we are a resource heavy country, so we are gold, coal.
That's great. I want that.
Yes.
Give me the stuff. Rocks on the ground.
Yes. Okay, and then I mean, in crypto, like you mentioned that you're long Zcash, Hyperliquid, Bitcoin. I mean, you seem to have gone into very defensive mode with your crypto portfolio.
Well, so last year I analyzed my trading performance, and I lost money on, I think, 75% of trades that I did. But I mean, overall, I made money net because of a few great calls on, quality shit coins. And so, I got to learn my lesson. Stop trading the dog shit, the super duper really dog shit. Stick with the okay dog shit, and just take conviction bits.
I admire the fact that you've managed to analyze your trades, because I can't even, I'm too scared to go back and analyze my trades and realize what a dickhead I was by not, how many bad trades I actually took. So like, I admire the fact that you've actually gone and analyzed your trades, because I think that's like the first thing. You got to look in the mirror and say, gee, I made some terrible mistakes. Buying Elizabeth Warren and Joe Biden last year was so bad, such bad. You know, putting a couple of $100,000 into AI agents at the time was such a bad call. But I admire the fact that you've called yourself out. I must say, I've also gone into very defensive mode. I've gone into things like Bitcoin, ETH, Solana, but then I've gone into things like Coinbase. Like I'm almost all in on Coinbase. I'm almost all in on Circle. I'm almost all in on those kind of things where I'm like, look, regardless of which crypto survive, don't survive, Robinhood will survive, Coinbase will survive, etc., etc. That's.
I'm a Hyperliquid guy. I think that's going to be the story of this cycle, because even over the weekend we saw the power of HIP3 markets, right? Everything else is closed. You want to trade oil, you want to trade silver, you want to trade gold, you want to trade S&P 500, you want to trade Nasdaq. Hyperliquid. Bloomberg is even repping Hyperliquid as the place to trade on the weekends.
Hyperliquid.
Only more and more things are going to happen when the markets are not giving proper discovery, because the politicians want to lie to you. They want to make you see, oh no, nothing's wrong. You're not going to have this feedback mechanism. But now we have these markets like Hyperliquid and Polymarket and other places where we're getting feedback from the masses about what is actually happening. And I think it's amazing. And so I think Hyperliquid is a sleeping giant, and I'm going to publish my next essay.
We say sleeping giant. I mean,
I say.
You say sleeping giant, but I don't know if it's definitely a giant. That's my problem. My problem is when I look at Hyperliquid, it's got a $30 billion fully diluted valuation. Like that's.
I think that's the wrong way to look at it. It's got look at the market cap. That's all that matters, right? And then forecast how the circulating supply changes, right? So if you take a look at the circulating supply derived market cap, Hyperliquid trades at something like a 10 PE, whereas CME, Coinbase, Robinhood traded between 25 to 40 PE. Right? And this exchange is more transformational to how we do markets than any of those three other brokers or exchanges that I mentioned.
And why Hyperliquid? Why not Lighter? Why not Aster? Why not?
Again, Lighter, and I am an early stage investor in Lighter as well, so I have bags in Lighter and Aster and some of the other things. So. And I post this chart in my essay. The metric to understand the best metric for organic liquidity, we can never understand 100% is somebody volumizing or how much is based on liquidity farming. So what is the best metric to compare these on? It's the average daily trading volume divided by the open interest, right? So the lower that ratio, the more organic, the real people. Real wallets are doing real activity because they want to trade, not because the exchange is faking volume or there's wash trading going on or they're trying to farm an incentive. The lower that number, the more organic. Hype has the lowest ratio. I don't know what I pulled the numbers for January. Hype was about 1. Lighter than all those other ones were between like 3 and 10.
All the
right?
rest are not organic. So, all the rest are not organic. They're all airdrop.
I don't know. I don't know for sure. All I can have is a roadmap, and this metric shows me that Hype is the most organic. I can't tell you, anything more than that. So if you want to talk about who's real, Hyperliquid is real, the realest of the real in terms of volume. They're charging fees. They're making money. They're taking those fees and they're buying back their fucking token. Not like a lot of these projects. And to top it off, they've shown restraint in terms of the team distributions.
Yes.
So we've had, November, December, January, February in terms of distribution. So in November and December, I think they distributed about 25 to 30% of the total amount that they could have as per their tokenomics. In January and February, they've reduced it even further. They've only authorized 1%, a little bit more than 1% of the total amount that they could have. So obviously this team, it's all their tokens, right? And so they've made a collective decision, hey, we'll make more money in the long run if this token price pumps. Why did the token price go from 60 to 20? Because the market was afraid that once we get something about 10 million tokens per month, we're just going to dump all these tokens like every other founder and, have bottles at the club, right? And so they removed that narrative risk, and I was one of the people pounding that narrative risk in third or fourth quarter of last year. By saying, okay, we're going to make a decision, and we are not going to distribute as many tokens as we could. Now, obviously, this is a completely decision. They can do whatever they want, but all we have to go on is past distributions. And for the last 2 months, they've reduced that down to 1% of what they could have. And so now, if we have revenues going back to $1 billion annualized, we have HIP-3 markets, which are leading the way in price discovery and the things that we want to trade in these volatile times from a geopolitical standard. We're going to be burning more and more tokens every month, such that Hype is going to be, number one, it's the highest revenue generating project apart from an L1 in the entire crypto space. They distribute 95% of all the money back to the token holders, and they've restrained themselves from dumping their team allocation on all the retail holders. This is the best project in crypto.
I'm sold. I'm sold. I want to ask you one more question before I let you go, just because I'm cognizant of your time. I know you've got to be on a snowboard or a kiteboard or or at the gym, and I am cognizant of your time. The Clarity Act. They're making as if like this Clarity Act is like, if this doesn't blah 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 blah. The Clarity Act. How important is it?
Not important at all. It's a zero.
It's a zero. Tell me why you think it's a zero, because I've heard that view and I thought that was your view. That's why I left that question for last. Tell me why you think.
So what are we doing here? Why are we here? Building this new financial architecture. Are we here just to become another piece of the TradFi ecosystem where, Coinbase and BlackRock and Ripple and all these guys spend hundreds of millions of dollars on lobbyists to go tweak this or that language so they can fuck their clients in two different ways? Is that what we're here to do? As a crypto ecosystem?
No. But the issue is that big American corporations can't invest in this technology.
Who cares?
Well, we need money. If you want prices to go up, you need money to flow in, no?
No, we don't. We didn't need them before. Bitcoin went from zero to where it is today with none of this stuff. Why did they go up? Because central banks printed money. That is why Bitcoin and the technology is sound. If you tell me that the technology is sound and that central banks will print more money for the various reasons that me and others have spoken about and written about, Bitcoin and crypto will go up. It's a bonus if we get the BlackRocks and the large institutions who want to offer this to their clients, because their clients recognize the same thing we recognize, in that there is this runaway train of debasement of every single fiat currency in the world. But I am not going to degrade the principles that got us here today to get another fucking corporation in owning crypto. You don't want to own crypto? Don't own crypto. It's a free market. Do whatever you want. But don't constrain the ability for people to build solutions because you want to maybe get some corporation to buy crypto. Just don't buy it.
Why do you think Bitcoin's tracking this IGV ETF, which is like, it's a basket of the software ETF products, which are being displaced by AI? Why do you think Bitcoin's tracking this thing so closely?
Because Bitcoin is saying the same thing I was saying earlier, that there's going to be this deflationary credit event, and there will need to be a lot of money printed to forestall the societal change that needs to happen in this new AI era. And Bitcoin's going to say, okay, well, I can't forecast when this is going to happen, when the Fed's going to press the button and say, okay, cool, we need to underwrite this whole system, print a bunch of money to back up the banks. But I know it's coming. And I know that there is a massive deflationary event in the economy, especially in the United States. And that's what it's telling us, and that's why it's tracking IGV. Whereas you take a look at Bitcoin versus the NASDAQ's meandering sideways. Bitcoin software are getting absolutely pummeled.
All right, I won't keep you from the gym, the snowboard, the kite. My conscience is getting to me, so I won't keep you. Always good to have you. Nice to chat to you for us on a Monday morning. Thank you very much, my friend, and let's chat soon.
All right.
Cool. Guys, I really love his opinion. He really goes deep. And if you haven't read the two essays, so the first one is this one, which is It's Fine, or This Is Fine. And the second one is one that was written recently about the war, and this is called iOS Warfare. I think you guys should actually do that. Otherwise, I'll see you guys again tomorrow. Until then, trade well, my friends.